John Pierpont Morgan back in 1912. I don't know what the question was, but his answer was quite simple, and that is money is gold and the rest is credit. Now you might think that that was just an opinion of JP Morgan, but actually it is a legal fact. Money is gold and silver coin or bullion. That is money. Nothing else is money. It's as simple as that.
There are bull markets and bear markets in basically any tradable instrument or commodity, or I consider gold to be a form of money. But the first great bull market was 1971 to 1980. It lasted 9 years and gold went up 2,200%. The second great bull market was from 1999 to 2011. Gold went up at just a little under 700%. Now, I had a very interesting conversation with Jim Rogers. Jim is one of the great commodity traders, money managers of all times. And this is around 2014. But so I said, Jim, what do you think of gold? What are you doing? He goes, well, I own it, of course. And he said, I'm not selling, but I'm not buying right here. And he said something that just hit me right between the eyes and it stayed with me. And of course, he's right. He said, gold's going to the moon, but nothing goes to the moon without a 50% correction along the way. Now it's going up and the sky's the limit. My point was that we had the retracement between 2011 and 2015. That's done. Now it's just onward and upward. I've got gold at, I would put it at $15,000 an ounce before 2025. But as I point out, if you're going to $15,000 an ounce, you got to get to 3,000, 5,000, 7,000 first. So there's plenty of room to run. Plenty of room for profits. I want to be clear, there's a lot of analysis behind it. I don't just pull a big number out of the air and, for publicity, because I could care less. And there are a couple ways to think about it. Just take the average of the two prior bull markets I mentioned. So 71 to 80, 9 years, 2,200%. 99 to 2011, a 12-year bull market, about 700%. Just take the average. You don't have to go to the higher of the two or extrapolate. Just take the average of those two bull markets. You would say, okay, well, the next bull market's going to be a little over 10 years. It's going to go up 1,500%. So using that as your base, just take the average of the two. You say, all right, 10 years from 2015, that puts you out to 2025, puts you at $15,000 an ounce off a 1050 base. So that's just history. But there are other ways to think about it. I don't know if there'll be a gold standard or not, but I do know that the price of gold will move in the direction of where it would need to be if you're going to have a gold standard. And I talked to Paul Volcker about this, and he agreed. If you just took the money supply, so just take M1, which is pretty widely accepted definition of money supply. Take it for the U.S., the ECB, UK, Bank of Japan, and People's Bank of China. That's over 75% of global GDP right there. Divide that number by the official gold, which is about 34,000 metric tons, a little bit less. You come to $15,000 an ounce. So if you're going to either have a gold standard or even use gold as a reference point for money, if you need to restore confidence in the dollar, the implied non-deflationary price is $15,000 an ounce. So what I find interesting is that if you use just the history of the last two bull markets and average them, or if you use a rigorous calculation, what's the implied non-deflationary price? Interestingly, they come out in the same place. I don't think they have to. They're two different methods, but they both point to $15,000 an ounce sometime over the next 3 or 4 years. It is a moving target. The numbers I gave you are based on current levels, but Peter's exactly right. You keep printing money, you're going to need a progressively higher price of gold. My numbers, I think, are conservative. They could be much higher.
Why do you hold gold coin? Well, the reason for that, quite simply, is Gresham's law. You will sell pounds or transfer money from your bank account into a coin dealer's account to gain gold. And you do that basically because you are worried, let's say, about the stability of the currency. What you end up doing is just hoarding it. And at times when when the general public are more worried, they will hoard more of it. And interestingly, countries which have tended to be on a gold standard have found that their citizens don't really need to hold gold because they've got confidence in the currency. And that's the situation which actually we don't see too much today.
Gold's track record is clear, and so is the US dollars. Fiat currencies have come and gone, but all the while, gold and precious metals have stood the test of time. Get started protecting your retirement savings today. See the links in the video description to get access to the free gold investment guides from the best gold IRA and gold investment companies that we have personally researched and vetted. You have nothing to lose, but you have wealth to keep. Thank you for watching.